All right. Hello, everybody. Welcome back to another market close. It is 3:47 p.m., Thursday, January 4th. We are streaming to Twitter today as well. I don't know what this looks like on Twitter. This is the first. Oh, here we go. We're on Twitter. I see myself on Twitter. Is there sound on Twitter? Yeah, there's sound on Twitter. All right. So for those that are watching on Twitter, this is the first time I guess you guys are seeing a market open. I don't really know if your comments come. I think I will see your comments here, but I can't respond to your comments from YouTube. So if you do chat on the Twitter thing, then I guess I will see you on the live stream. We have a lot to talk about today. This is going to be a pretty exciting market close. We got a market close in about 13 minutes. The Bitcoin spot ETF approval seems more likely than ever. I didn't say more likelier than ever, because I'm learning at 26 years old, proper grammar. But it seems more likely than ever given some of the updates that we're seeing today. We've got a bunch of things to go through in terms of different individuals in the Bitcoin crypto ecosystem, including the chief legal officer at Grayscale, that is just casually filing some forms, along with a bunch of articles I want to show you guys for what we have going on. On top of that, we have to talk about the JOLTS report a little bit more. There was one thing I didn't talk about on the market open around the JOLTS report, which I thought was incredibly interesting to discuss. So we have to discuss that. And then obviously we have a bunch of other news in terms of how the miners are performing, which really isn't that good. Bitcoin is up 5%. The miners were up about 7-8% in the morning, and then they've kind of chilled down now about at 1%. Robinhood struggling to maintain that $12 level. And then we have some Disney ESPN news as well that I think is really interesting to discuss. So we'll talk about that as well. Justin Bryant, Manow, Rock and Ronnie, Imnop, Invisible Voices, Bryant Robinson, Broccoli Bob, David, Kyle F, Lussy Picker. Kyle F says, I've just seen an entire tub of ice cream due to the markets. It's not that bad to need an entire tub of ice cream. Well, it depends what size. If you're in Walgreens, yeah, you probably need some ice cream. But the market's been okay today. We'll talk about it. Patrick, Broccoli Bob, Lars, Jared, why is Clean Spark lagging? We'll talk about that as well, because that is something I definitely want to discuss in terms of Clean Spark. We have Jason said, admit you just said market open. I believe it's market close. I'm sorry. I will get better. I'm learning how to do it. Kelly, hello. Thank you for being here. You are saying welcome to the market close. Jason Reynolds, where he calls it the market open. Yeah, I can't get a break. I can't get a break. Ben George, James, Mark, Babcock, Marcus, Aaron C, Brian. All right, Michael Wilder, what's up? All right, let's get into it. So I think we'll start off with, and hello to everyone on Twitter. I think there's 9 people on Twitter right now. This is the first time I'm streaming to Twitter, so it seems like it's working pretty decently. And let me know if there's anything wrong with it. Oh, it's Kelly. I just saw your comment. OMG, this is so cool on Twitter. Okay, cool. So we got the Twitter sphere with the market close. All right, so Bitcoin spot ETF approval. Let's start off with that. We've got a bunch of updates on that, and then I want to go into some of the other things that we're seeing in the macro. So we have a couple of tweets I want to go through in terms of different things that are going on in regards to Bitcoin ETF. The chief legal officer of Grayscale, which is the one of the core positions in the market in terms of getting some exposure to Bitcoin, even though they don't literally have Bitcoin, they have like a version of access to Bitcoin. The chief legal officer just tweeted, Craig Same just filling out some forms. Okay. So this is what we got from here. Craig Same just filling out some forms. This tweet got 1.6 million views. I mean, that's how much anticipation and hype is there when it comes for Bitcoin. I mean, there are a lot of people that are trying to get access to this thing. Yeah, the Twitter stream I think is not working as well as, that's a StreamYard thing. So I'll look into that. It's saying the media can't be played. It was working for the first like 5 minutes, but all right. So we'll work on that. So sorry for those who are on Twitter. You can come on YouTube if it's not working there. It's 1.6 million views on this just filling out some forms. Now, this guy is the chief legal officer at Grayscale. Obviously, very important if he is filling out some forms and kind of hinting to the fact that he's filling out some forms for a particular reason. This goes in line with an article that came out today on Fox. SEC stock exchange officials meet ahead of potential spot Bitcoin ETF approval. The ETFs would trade on the New York Stock Exchange, NASDAQ, and the Chicago Board Options Exchange. So Fox Business has learned that the SEC staff attorneys from the Division of Trading and Markets are meeting Wednesday. That's meeting next Wednesday with officials from major exchanges, the New York Stock Exchange, etc. The meetings are seen as a positive sign that SEC is nearing approval of some or all of the dozen applications, including ARK Innovation, BlackRock, Fidelity, etc., by major money managers and crypto firms for the product, according to people at the firms who asked not to be quoted by name. Specifically, the SEC is asking the exchanges to revise and finalize their so-called 19B4 filings submitted by the exchanges on behalf of issuers, which must receive SEC clearance before the ETF can be sold to the public. That is a final technicality in terms of what needs to be done for the ETF to be approved, which seems like it's a good thing, and it seems like it's a positive indicator in terms of Bitcoin, or in terms of that ETF getting approved, versus something that's a lot more qualitative around the SEC trying to figure out if this is even something that that is worth approving at the end of the day. So that's something interesting that we're seeing. Now, they say, of course, the SEC could deny the applications. Hour before Fox Business reported on Wednesday meeting, Singapore-based crypto forum Matrixport, we talked about this yesterday, released a research note saying that it expects the SEC to reject all the applications, saying that the 5-member commission comprised of majority Democrats, along with Chairman Gary Gensler, don't embrace crypto. The problem with that argument, in my opinion, by the way, Bitcoin up about 4.3% in the past 24 hours, and that's why we're seeing a little bit of momentum there. The problem with that argument is that I don't think politics can get involved here at the level at which it's at. Politics could have got involved for the past 5 years, which they did get involved for the past 5 years, but now we're at the point where you kind of can't deny them without getting sued, especially if you have to, as an objective entity, take a look at the arguments. This is not like the Supreme Court that has the subjective ruling in a 5-4 decision, 7-2 decision on something that they feel. This is where you have to take into account legitimate arguments around an asset class and then ultimately make a decision. And your subjective bias, if it protrudes in a way that is so ridiculous, you're either going to get sued or it's just not going to be reasonable enough for the argument to make sense. So at this point, could it happen? Could it get disproved? 100%. Anything could happen. It just seems a little more unlikely than before, especially with a lot of the different institutions saying that they are getting ready for approval. Another big thing that happened is Anthony Scaramucci, who's been in the crypto world for a while. He tweeted, "It's done," which was very interesting. Now, obviously, that doesn't mean it's literally done, but he's either clickbaiting or he has some inside information. We got spot Bitcoin ETF approval is as close as done as we've seen, a senior Bloomberg ETF analyst said. This came out a couple of minutes ago. And then we had again, from the Wall Street Journal, or not from the Wall Street, from the Fox Business Report, SEC is giving final comments. So as we speak, the issuers will submit a final 19B4 as an S1 soon after. So, I mean, this is definitely as close to done as we've been, but no official approval as far as I know. This is the senior ETF analyst for Bloomberg, Eric Balkunis, who is saying this right now. It looks like it's happening, folks. I mean, it looks like it's definitely happening. We're seeing the price action in Bitcoin. Garcia, I see you on Twitter. Is it working on Twitter? I just got your comment on Twitter. Let me know if it's actually working on Twitter, because it was being a little weird for a second. It might not be working. Is it working now? I don't know. Let me know if it's working for you, because it was not working for me. But if it's working for some people, then that's good. That's good. Okay, so what do we have? Okay, so here we go. Here's Bitcoin, 44,247. It's up 2.43%. It was just up 5%. You know, what's really interesting about kind of the price action here on Bitcoin is that we hit 45,840. We were close to 46,000. Then we dramatically got liquidated to 40,643 within the span of 10 minutes because of that Matrixport analyst. And if you bought that dip, you're up 4,000. And that dip was primarily a dip just based on a research report that a lot of people took seriously. So if that research report ends up being true, then yes, Bitcoin is going to fall off a cliff. If it's not true and the ETF gets approved, maybe it doesn't, fundamentally go higher, but it definitely, hopefully doesn't have to go down as bad as it needs to go. Okay, it's working on your end. Okay, perfect. So Crossroads, I see your comment on Twitter. It's not being played. Kelly is not being played. Well, it's working for Garcia. That's weird. I think that's a StreamYard thing more than it is my account thing, but maybe it's a bug on my account. So I'll look into it after. At least it's working for some people, which is a good thing. So that's what we're seeing with Bitcoin. I mean, that's what we're seeing with Bitcoin. It looks like it's getting to the point where the markets are trying to price this in. Anthony Pompliano was on CNBC today, pumping it up. He was pumping up the stock like we need him to do. He's one of the best, pumpers of Bitcoin. I think this man says he has 95% of his net worth in Bitcoin, which is, a lot of money in Bitcoin. But he's been pretty bullish for a long time, and his argument is just that volatility come to the to the upside or downside no matter what happens. Obviously, there's going to be more volatility to the downside if we don't get the ETF being approved. So we'll see what happens. What's Twitter? Is this the market open? Sorry, I keep saying market open, don't I? Market close. Kelly says, guys, hurry. What should I buy before the bell? Well, I wouldn't buy Walgreens. I wouldn't buy this one. We were talking about this one earlier in the morning. This bad boy down 5% of the day. I think Walgreens will be fine because the only reason they weren't profitable was probably because of rising labor costs. That will normalize. But they did $36 billion in revenue and still had a $66 million loss. It's likely within the next 3 to 4 quarters, I would imagine they're profitable. Right now, even the shakeout today is not as bad as I'd imagine because the people that are leaving are probably just the people that decided at the end of the day they don't want to own a stock with a low dividend, but there will be buyers back later for the stock. I mean, the business is still fundamentally sound. It's just not fiscally in the best spot, and eventually that will change. In terms of an actual buy, I don't know what the stock is to buy today because today's a green day and we try not to buy too much on green days, but QQQ is down a little bit, 0.51%. SoFi recovering 1.14%. It was down 14% yesterday, so nice to see it have a green day today. Robinhood at $11.97. It's really struggling to hold that $12 level, but it's better than it was before. It was down to that $11.70 range. Palantir also was at $15.95, then it bounced right back. It went to $16.40 at one point. Now it's at $16.25. So we've seen a lot of stocks bounce back from their lows in the market open. And even the miners, I mean, CleanSpark was up 8% at one point today. It was at like $11.35. They're up now only $1.37. Riot and Marathon as well. They're up 5.2% today, performing a little bit better than CleanSpark. Marathon up 11.64%. So yeah, CleanSpark seems to be the anomaly that's hanging out. I think Coinbase is green as well. Coinbase is green indeed, up 2.28%. The Bitcoin stocks are not mooning as you would expect as Bitcoin is up 5%, but they're definitely not tanking, which is a good thing if they can kind of consolidate in this level. And then eventually that ETF approval happens. We see a potential godlike candle on Bitcoin. Then I think those miners will do very well. S&P is down 0.34%. And I think this is because of big tech. Let's check on Apple. 2 minutes till the market closes. Apple 181.98, down 1.28% on the day. Makes sense. Apple continues to have a little bit of struggle as it is down, I think almost like 6% for the week now, which is a lot for Apple when it's down that much. Should I buy Tesla? Where's Tesla at? Where's Tesla? Tesla's 238. I don't know. I mean, Kathy's buying Tesla. I think Q4 earnings is what's going to determine a lot if Tesla continues to stay in the sideways flat range that it's been, or if it finally breaks out. It did try to break out last week of December, getting to that 260, 255 level. But then it just came back down. Again, remember, Tesla is big tech, and big tech, every analyst is saying big tech is going to have a hard, outside of Dan Ives, big tech is going to have a hard time this year just to be able to get those monster gains we saw last time. It's like 10%, 12% is possible. But remember, big tech was up triple digits last year, or 80%, 70%, right? That's going to be a little bit harder. And they only need to go up 10, 15% to reach their all-time highs in the context of Google or Amazon. Amazon's all-time high, 180. Google's all-time high, about 160. So we will see if they can get there. But Tesla right now at 238 right now. Michael Wilder says you still own CleanSpark. Marathon's looking nice. Not familiar with Cypher. Yeah, Cypher is a new one that I got familiar with because of Jesse. This one was up today as well. SIFR. Yeah, this one was up 6.62% as well today. So the Bitcoin miners didn't have a horrible day, but they definitely didn't have like a monster day, given Bitcoin recovered to that 44,000. Bitcoin's trying to break out of 44 grand. It's been stuck there, obviously, for like the past month. When it breaks out and stays above that level, that'll be nice. But as of now, it's not there. All right, folks, it is January 4th, 4 p.m., third market open ever on this market close ever on this channel. The market is now closed. I still don't have a catchphrase for when I do after the bell. Nothing feels right. I'm sorry. I don't know if it's shut your asses down. I don't know. I don't know. We're still trying to figure this out, dude. I need suggestions. Can you please comment suggestions? Because it has to say the word asses. I just don't know how we're going to say it in a way that doesn't sound ridiculous. So please let me know your suggestions here. All right. Coinbase 155. It closes green. Apple 181 closes red, down 1%. Tesla 237 closes down 0.22%. Google down 1.65%, 138. It closes as well. Google's at 142 a couple of days ago, now 138. Walgreens down about 5% of the day. Riot up 5% of the day. Palantir opens or closes 1% positive on the day. CleanSpark positive by 1.8%. SLG positive by 1%. SoFi positive by 1.32%. Robinhood 1.61%, 11.98. Again, I was looking at Robinhood's book value, or sorry, their book volume and the order 2 levels. They had like 30,000 shares waiting at a wall at like $12.05. And so there just wasn't the demand side pressure to break through that yet. So there are a lot of sellers at that $12 range. And that's why it's hard for Robinhood to close above that $12 right now. Verizon actually got upgraded today, up 0.57%. We're going to look at a video on that in a second, by Wolf Research to $46. That's their price target on Verizon. So similar to arguments to what Chris has been talking about. And so we'll discuss what's happening with Verizon. Garcia says, shut the damn door. That's not too bad. Shut the damn door. But J Pal said close the effing door. You know, that's dude, that was hilarious when he said that. That was hilarious it was great. It was great TV. It was great TV. Nvidia closes up 479. XLF financials close up well. Hershey's a little bit red. Oh, by the way, the podcast with Steve and I, my good friend Steve, that'll be starting today at 6 p.m. And we are going to be deep diving on a stock today. I don't want to say the stock yet, but it's a stock that he believes can double. He's initiating a position, and he just wrote an article about it on Seeking Alpha. So he's pretty excited about this. Every week, we're just going to pick one stock, and we're going to deep dive. So this is one of those research idea type of podcasts. It's not going to really be market news or macro. I mean, we'll talk about that stuff, but it's primarily going to be, let's take a stock and let's dissect it. So we're going to do 52 stocks a year, and we'll see if by the end of the year we got any winners out of those 52 stocks. KRE is up 0.49% on the day. Schwab down a little bit. Snapchat up 2.66%. All right, it was a okay day. It wasn't too bad. Bitcoin right now 44,436 on the day, and Palantir is 16 at 25, up 0.99%. Not too bad. Not too bad. It wasn't a red day. Wasn't a super green day. It was kind of a flat day. Some stocks were green, some stocks were red. Overall, pretty all right. Close your laptop and go get some ass. The market is closed. That's not the worst, I guess. It's all right. It's just, I don't know. We need something that's not as long. Like wake your asses up is perfect for the market open. For market close, I don't know. It's got wake your asses. It's 4 words. We need 4 words that are just like, boom, we got it, and it's gonna be good. Amit, do you hate Tanner? I need you on that SoFi Weekly. I miss you. Guys, that Amit said SoFi is just a bank. He is no longer aware. Me and Tanner were actually DMing the other day. Okay, Tanner is still a very good friend of mine. We were talking about a bunch of different life things. I think I'll probably make an appearance on SoFi Weekly eventually. He wanted me a couple weeks ago, but I was busy that night, so I couldn't do it. So I'll probably hop on eventually. I don't know when. But again, guys, the reason I left SoFi Weekly is just like I'm streaming 4 times a day. Like it's at this point I just don't have the time for it. It's really, really tough. And on top of that, it's just, again, I'm doing a lot of shit, and so to like, I like SoFi, but it is also a bank, dude. Talking about a bank every week is not the easiest and not just the most exciting compared to a lot of the other stuff I'm doing. But I'm still bullish on SoFi. I still love SoFi. I think SoFi is going to do well. I think SoFi is going to end the year at $12 minimum. I think by 2024, SoFi will be $12 minimum. And if it's not $12 minimum, then we all got the investment thesis wrong when it comes to SoFi. All of us got the investment thesis wrong. Okay, Steve just texted me the podcast is at 5:15. That's what we're doing. So 5:15. So this will end at about 4:45. Get ready for 5:15. That's when we will do the podcast. Sit your asses down. That one's not horrible. That could work. Get out of bed, bitch. Air your ass out. All right, you guys are dirty or naughty. I don't know what you guys are thinking, but we need some decent normal ones. Okay, I want to talk about Disney real quick because we have a little piece of news here. Disney just got about $920 million. So let me talk a little bit about Disney. Their stock really didn't move on this news, but they did indeed get something here. So let me pull this up. Disney's ESPN signed a $920 million deal with the NCAA that's worth 8 years, $920 million. ESPN and NCAA have signed new media rights agreements that runs from 2024 to 2032. The deal is roughly triple the value of the current deal. So, I mean, like, that's definitely a good sign on Disney. And the agreement will provide more revenue to women's sports as well. Disney actually down for the day, down 1%. So really didn't get too much value from this. The new agreement carries an annual value of roughly 3 times the current 14-year deal, which pays out about $40 million annually. ESPN and the NCAA and NCAA have enjoyed a strong and collaborative relationship for more than 4 decades, ESPN chairman said. Remember, the NCAA is the organization that hosts all the college sports, including basketball, football, softball, gymnastics, all that good stuff, baseball. I don't really watch sports at all. There was a time in my life where I thought I was going to become the next LeBron James. I did start JV point guard in freshman year, so I was just trying to be the next LeBron James, and that's when I was like rigorously watching basketball, and I cared so much about it. Now I couldn't give two shits about sports. I mean, like I just legitimately cannot watch anything about sports. I'm now I watch videos about the finance market, the stock market, right? Like so that's where my attention has shifted. But sports is a massive market. And instead of getting $40 million a year, ESPN's getting $120 million a year from the NCAA, which makes a lot of sense. How they're going to do the distribution of this, I think, is going to be incredibly interesting because remember, the cable business is dying. So the question becomes, all right, if the cable business is dying, how exactly are they going to distribute this? It would be really interesting if ESPN Plus becomes more important here and they're able to sell more subscribers. It's going to be really interesting if they sell some of those rights to some of the bigger tech companies. It's going to be really interesting if Apple buys the ESPN and then they get the $920 million in terms of that deal. I mean, think about that, $920 million over 8 years. That's like $1 billion of revenue over 8 years. If Apple were to buy ESPN, that's like more top line revenue growth. That's $120 million Apple gets to just put in top line revenue growth per year just off that one contract if they were to acquire the asset that is ESPN. What would ESPN be worth? I mean, they got $1 billion deal over 8 years. Just now, I would imagine it's worth a much higher multiple on that. I mean, I would think ESPN goes for a minimum of 20 to 25 billion. Just like it is the worldwide leader in sports. But we will see if it ends up happening. Disney didn't get the money. They had to pay more for the rights. Okay, that changes everything. That's why Disney's down. Interesting. So Disney didn't get the money. ESPN had to pay $920 million. Wow. Okay, that's different. That is different. Disney has to pay more to NCAA. They did not. They had to pay more for the rights. Wow. I said the NCAA and ESPN Inc. 8-year, $920 million media rights deal. So the NCAA is what made money today. That's why Disney's down one. I was wondering why Disney. I was like, damn, Disney just got $1 billion over 8 years. Shouldn't the market be a little bit more excited? Nope. The market. Well, I guess this just proves the structural problem in Disney, which is that they have to. I mean, they're probably going to make more on the back end of this deal, but they have to pay for the content. Chris Patel says the deal has an average annual value of $115 million, which more than triples the amount ESPN paid on average. Yeah, I read that wrong. I thought they were getting. Yeah, that makes sense. Sean says, how do you think the NCAA gets paid, bro? So, yeah, that makes sense. That makes a lot of sense. I saw the headline and I was like, oh, Disney gets money. Nope. Disney does not get money. Disney has to pay money. ESPN is worth nothing more than the brand name. I disagree with that. I think the brand name is ubiquitous across the world. ESPN still gets about 500 million. Let me check right now. 500 million website hits a month, which is just insane when you really think about what is ESPN, which is a lot of sports articles and just, people that are interested. It's still one of the top 4 websites on the iPhone as well. If you click on your Safari browser, ESPN is there along with Yahoo. Yeah, 524 million every month. They get 18.71 million hits a day just on ESPN. And you think about how competitive content and media is in terms of all the different avenues you can go to get your sports. You got The Athletic, you got the New York Times, which acquired The Athletic. You have so many, you have Bleacher Report by CNN, so many different places you can get news and journalism around sports. And ESPN ultimately is what's getting a majority of the viewership. Justin Bryan says viewership about to be up with the new NCAA football playoffs next year. John Sargent says ESPN Sports Zone in Disneyland used to be huge in downtown Disney. Yeah, I mean, that is interesting. Daryl, wow, that's a hot take. ESPN is the next Kodak. Interesting. Yeah, this is that's a good. It explains why Disney's down today because they have to pay a lot more for the sports rights than they did before, which makes sense. I mean, this was a deal that was expiring, so we're getting into a new 8-year deal. But that is some money that they're going to have to ink out towards the NCAA. All right, well, that's why Disney is down. 2 things I accidentally click on when I open my phone: my Robinhood and my ESPN app. That's hilarious. The ESPN channel has fallen so far from grace. One thing about ESPN that has been pretty rough that I think a lot of people, have made a point on is that they have become very political over the past couple of years. Look, I don't care that much about it because I don't care one way or the other, but there are a lot of people in America that just don't want politics mixed with their sports. And I think one of the problems that ESPN has had is that they've mixed a lot of politics with their sports. I mean, they've tried to make political messages and things of this nature. And, it is what it is. If you're going to do that, then you're going to have people that just don't care about consuming that content and they're going to go to other places. And so that have you guys been keeping up with what's going on with Disney as well around this Star Wars thing? I just remember this thing. They're doing this new Star Wars movie and they're trying to make an argument around, I guess, ending the patriarchy, and they're trying to make a broader theme around highlighting women characters in Star Wars. Here's a little clip. Let me show you guys what's going on here. I mean, this is just another variety of challenges that Disney is facing right now.
Activating a force for change, but also trying to permeate that patriarchy, that power structure. And is that a part of the calculation of your art as well? And what's been the reaction to that?
Oh, absolutely. I like to make men uncomfortable. I enjoy making men uncomfortable. Not you, just not you. Not you.
Point taken. Point taken.
But it is important to be able.
So, look, I'm not expressing my belief on that, but that is in reference to the new Star Wars movie that is going to allow more agenda-driven activism into the different movies that are coming out. And as a result of that, either you like it or you don't like it. But that is something that some people are not going to enjoy. That is something that some people are going to enjoy. And at the end of the way, that's going to be pretty tough. Inbound says, admit you're late. They've been saying this about Star Wars since they bought the company. Yeah, but I guess, now I guess it's manifesting in the actual content itself. And the question simply becomes, is it good business or not, right? Is it good business to have that type of approach to a movie from a political perspective? If it gets more seats in the movie theaters, then yes, it's good business. If it doesn't, then you got to figure out from a shareholder perspective, it's actually a good thing or not. The thing is, we'll objectively know, right? When the next film comes out, we will know, is that a good approach or is that a bad approach? But I guess we're going to have to wait until that actually comes out. Chris has a really good comment here as well. He says, this is the problem with sports streaming rights. This would be nothing for Google, Apple, and Amazon. All leagues will use this to extract money from ESPN and thus Disney. I 1000% agree with this. This is another problem with Disney's model. Like, if Google had to pay $1 billion for the NCAA streaming rights, I mean, they would pay that and not even blink, right? That's like literally pennies to the dollar on them. Same thing with Apple or Amazon. Like $1 billion is nothing. For ESPN to shell out $1 billion, that's a lot. That's like, ESPN doesn't have $1 billion just sitting around. They can easily pay for that stuff because they're not a tech company. And this is, I think, the fundamental nature between a media company and a tech company. A tech company gets a multiple because they have fixed costs and they're able to expand their operating margins because of those fixed costs. And they're able to have essentially infinite scale, right? If you're a tech company, especially in the consumer space, your TAM is infinite. There's 8 billion people on the planet. All of them eventually will have access to the internet. If you're a tech company, you're operating through the internet, and they will have some type of device, whether it's a phone, a computer, et cetera, to access your products and services, which expands the potential, not only market opportunity, but the margin you're going to be able to get, because those fixed costs inevitably will create unit economics, and you're going to have a really good business and the market will reward you for that. Whereas a media company, they have to pay for the media. They don't get the user-generated content the way a Google can, or they don't have the unlimited margins the way a Google has. This has always been my bear case with Netflix. Now, Netflix is an anomaly because they just got streaming right, and they got the content right better than everybody. Squid Game, House of Cards, Stranger Things, etc. But that is one of the fundamental problems between media versus tech companies as well. Chris Patel, he says, glad I got the F out. No amount of DD helps stupid decisions. Sean agrees. Bang on, Chris, putting themselves out of business competing. Yeah, it was really interesting as well, because remember when Chris got out of Disney, the reason he got out of Disney was primarily what put the nail in the coffin was, Bob Iger basically stopping the advertising on Twitter. And at the same time, this, Bob Iger was advertising on TikTok, out of all places. That is just like, I'm not going to go on a rant around TikTok, but like the type of content you go on TikTok, if you sign up for an account today and just see it, it's like, dude, there is literal porn on TikTok to younger kids, right? And China says no, that we're not showing it to kids. Yes, you are. Like all those 13. I was at a party the other day at a Christmas party at my mom's friend's house, and there were a bunch of like 13, 14-year-olds, and I was just asking them, what do you use every day, right? I was very curious because I thought they might say YouTube, right? I thought they were like, they're on YouTube, they're watching their favorite streamers, they're watching these Roblox kids, etc. They said they spend 3 to 4 hours a day on TikTok and then about an hour or two on Snapchat. They don't really use Instagram. They definitely don't use Facebook. TikTok, YouTube is like, they say they sometimes might go on YouTube, but TikTok and Snapchat encompass their attention. Snapchat I expected, because for some reason, even when I was like 14 years old, I used Snapchat a lot. Now I don't use it. But TikTok, when I asked him how much is your screen time, the kid, like, he was embarrassed to say that he spends 4 to 5 hours. And I said, hey, when you follow someone on TikTok, are you actually following them, or like, do you just follow them because, like, you like the content, so you follow? And the kid was smart enough. This is a 13-year-old kid. He was smart enough to say, actually, no, the TikTok algorithm adjusts their videos based on the way you interact with the app. So even if I don't care about the creator, but I like the content I saw, I'll press follow just to signal to the algorithm, this is more of the type of content I want to see. I mean, these kids are smart. They're not stupid at all, right? And so from that perspective, you can tell that they're working with the algorithm to give them a certain type of content. And to imagine that the algorithm's not showing them pretty, horrendous types of content to these kids is a bad assumption. Disney's still advertising on that platform, right? And so their lack of advertising on Twitter, mixed with a lot of the stuff we were talking about just now, along with the fact that they just don't have the multiples to be able to justify, what a tech company should be able to do when it comes to content. I think that was a sound thesis for why Chris ultimately dumped it back in the summer. No kids use YouTube, it's Snapchat. Yeah, I mean, a lot of kids use Snapchat to message as well. He says, I wouldn't short Disney, but def not going to be in them. Yeah, and my bear case for Disney has always been since the summer. I just didn't think Disney Plus had a moat. Even over the Christmas break, I tried pulling up Disney Plus to just watch something, and I just found myself like, why do I pay for this? Like, if I really wanted to watch the Santa Claus, I could watch it on 123movies.com. If I deeply wanted to see the Santa Claus because I was in the Christmas spirit, I could find it illegally, right? I'll watch it. It's not that serious. It's not that big of a deal, right? You can find it somewhere else. Like, usually you don't, pay. Usually you don't go the illegal route because you want the speed and the convenience of it. But if it's just one movie once a year, after The Mandalorian, and then the only argument I came to is, well, if you have kids, they like Disney Plus. And so I get it, but I don't know if that TAM is the greatest when it comes to a streaming service. Have you seen Marvel Limit? I have seen some Marvel movies. I'm not the biggest fan. I just don't care that much about Marvel, like Iron Man, all that stuff. Those are cool things. But like, I didn't really watch the Avengers, what is it, Endgame or Infinity War, or that's like, I watched like parts of it. I just never cared too much about it. I'm on an island. I know most people care about it, but it's just one movie, right? They have to create more of those in order for that to make sense. And that hasn't really happened since then. Okay, we have a couple videos I want to go through real quick. First, I want to talk about Verizon, since we got our boy Chris, who loves Verizon. Wolf Research today upgraded the stock. So let's get an update for why Wolf Research believes Verizon is going to hit $46. Let's take a look at this.
Researches Peter Supino upgrading the stock to outperform with a $46 price target. And he joins us now. What is there to be excited about for Verizon right now, Peter, beyond the high dividend yield?
Morning. Yeah, thanks for having me. The funny thing about telecom businesses is the narrative is never any good. Everybody has a phone. The industry seems saturated. All the carriers look the same. Cable companies are now selling mobile. But beneath that, the big three telecoms are all solid businesses. Verizon in particular has been refreshed by new management, and they're growing by selling more to the customers they have. So with all the 5G money spent, we think now just paying down debt can drive the stock nicely higher.
And this is a big point. I mean, this is the argument Chris has been making, that their debt is incredibly low interest issue debt. So that 5G adoption, which is Chris has also been speaking about, can subsidize the cost of the debt, which eventually should increase that tangible book value. And then you got a stock that's higher than it is today.
Why has it been such a laggard? I mean, you mentioned some of the reasons, but AT&T, Verizon, it just feels like this industry's past growth.
Yeah, the industry is really saturated. As I said, everybody's got a phone. There are a few drivers, though, that are still enabling volume growth, leaving aside pricing and mix gains. One of those is that younger and younger kids are getting phones. There are 4 million humans at every age level in the United States. And I know from raising teenagers that my oldest kid got a phone when she was 13, and my youngest got one when he was 11. And that trend is going to play out for a while longer. Small businesses are also adding lines, enterprises adding lines for people as they want to separate work and personal. But these companies can also take price. All three of the big carriers increased their prices last year. But then to your point about the what has been wrong, over the last few years, the telecoms have had to absorb a huge incursion by the cable industry. And that's pretty well played out. I think we know what the cable companies are capable of doing in mobile now.
Meantime, I love your bit about falling capital intensity, especially at a time where the street's really paying attention to corporate capex for the year. Explain why that's happening.
The 5G network upgrades cost over $150 billion for the big three. That's the sum of spectrum investments and also the antennas and computers to support and make that spectrum useful. That spending is almost all done. The spectrum was bought years ago. The radio access networks are 3/4 of the way deployed. That'll be ongoing through 2025. And so CapEx is falling from peak levels down towards trough levels in what we think would be 25 and 26 fiscal years. And that enables these companies to generate more cash, pay down debt, and the multiples are so low. I mean, Verizon trades just higher than the average European telecom company. In Europe, telecom conditions are much tougher than the United States. And so you just hold the multiple and pay down debt, the equity naturally floats higher, and the 6.5% dividend yields are juicy.
Where have I heard this before? Where have I heard that last sentence before? You get free cash flow, you pay down the debt, the equity value naturally goes higher, and it's at a multiple that's incredibly low. And the dividend yields at 6.5. Where have I heard that before? So when the Fed funds rate comes down and people are looking for yield and capital appreciation, I mean, I hate to say it, folks. Actually, I don't hate to say it. I love to say it. I think Chris got this one right again. And from what I understand, it's a very heavy position for him. So this is one that's this is a big one. If he gets this one right, this is a big one for him. And I think he has till 2026 for this thesis to play out as well. So you got a lot of time on that sucker for this thing to actually work, which is why I love leaps, dude. Like I can't understand why people do these monthlies. Like sometimes I go on stock twits and I see people on these different tickers like, oh, I got this XYZ strike price for next week. And I'm just like, how do you sleep knowing like maybe you're playing with a substantial amount of money and you don't care if you lose some here or there. And at the end of the day, it's just a profit and loss statement to you. But I mean, when you're to options, I just feel like, if you give yourself some time and you have a sound thesis, it could actually do well at the end of the day. Chris has talked about this on his Patreon. As you know, speaking of your Patreon, Chris, let's not only give a shout out to your Patreon, but let's exploit your Patreon right now for some content. Let's do that right now. Ladies and gentlemen, Chris made a post on his Patreon today called "Don't Buy the Dip." Okay, I'm gonna put his Patreon in the chat, so at least he's getting some exposure for us exploiting his Patreon. But it's like $10 a month. I would recommend signing up. Very, very good content. I pay the $10 a month, and I am a friend of his, so I pay for this content as well. But let's take a look at what his argument is for not buying the dip. His argument is primarily, well, let's see what he says. Today might seem like a positive green day, but I believe it's potentially a trap leading to underperformance in 2024. The market is waking up to the likelihood of the Fed maintaining higher rates for an extended period of time, contrary to the expected March rate decrease predictions. Essentially, his argument is a rate cut's probably coming in the summer versus in March, which means you have to be a little careful if you're going to go balls deep on a dip from the S&P to 478 to 468, which might not actually be the dip at the end of the day. December CPI print might be hotter to flattish compared with the previous month, possibly causing a market panic. However, January's numbers offer a more encouraging outlook, supporting a recovery in 2024. Focus on safeguarding capital and be patient to buy near the bottom. I mean, essentially his point is like, just wait until January numbers, which are going to come out in February versus in December, because December CPI might be hotter. And as a result of that, the March cut might be a May cut, which means it's going to be a little bit harder to justify buying the dip right now. So, that might be an argument for what Chris is ultimately saying. How is Chris so good at research, man? Well, he's spent 20 years doing research. And so when you spend 20 years doing research on equity markets, you get better at research. I think I'm in my legitimately second year of really doing research when it comes to equities. And so I've got a long way to go, but I think over time, when you just read so much about them, I mean, we were talking yesterday on the podcast or 2 days ago, Chris was telling me about cacao. Chris called me on Christmas break, and I tweeted about Hershey's, and he was just like, the reason Hershey's is down is because of cacao futures. And I was like, what is that? And so, that's what I mean, right? As you get older, you start learning so much more about how the market operates. And you start about in West Africa, the sun comes up in the different direction, and that's why blah, 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 blah. And at the end of the input cost to make chocolate is higher, which is why Hershey's margins are lower. It's really nothing to do with Mr. Beast. I mean, that may be a small portion of why Hershey's is down about 30% over the past couple of months, but it's more so about the input costs. So that's one argument for just doing better research and learning more about the market. Here's an update from our friend Keith Fitzgerald. He's a good friend of mine on Twitter, a very big Pouncer bull. He's bullish on Apple at a time where the market's not bullish. Let's get an update for why he's excited for Apple.
Even as everyone else has been backing away, and says he'll keep buying if the selling continues. Let's talk to Keith Fitzgerald, Fitzgerald Group's principal. Keith, it's good to see you again. Welcome.
Thank you so much for having me back. It's a pleasure.
Unbridled enthusiasm for Apple here.
I think this is a golden opportunity. I mean, both of your former guests are obviously extremely intelligent guys. They know their stuff, and I respect their opinions. But I don't think we're living on the same planet here. We're looking at Apple, and we're seeing a golden opportunity. You've got 240 million phones due for an upgrade. You got a sensor platform. You got 1 billion paid subscribers. You've got a business that is growing 30, 40, 50%. The services are sensory network with worldwide at this point. They're getting into finance. This is the year they're going to hear AI and Apple in the same sentence. I mean, I just frankly don't get it. I'm perfectly happy to buy more shares here.
And when we talk about buying more shares, give us the case, Keith, that this isn't the moment that we look back on and say, nope, that was the year Apple matured. Its market cap never got back to where it once was. Although I guess they could keep buying back stock and it would do just fine.
Well, look at it this way, Kelly. I mean, and just respectfully, let me push back. You know, people have been arguing with me for years saying, well, these big tech companies can't possibly get any bigger, can't possibly get any more popular, can't possibly get any more valuable. And that's exactly what they've done. You know, throughout all of the economic weakness, I haven't heard one person giving up their iPhone because the inflation is getting too high or they aren't skept. They're cutting back on their groceries, all these other things. The company has an MO that is proven and proven and proven. They come in, they wait, they watch, they let everybody do their thing, and then they come in with more panache, more cash, and a better consumer offering. I think, you know, again, a pullback like this, if you're talking about the next 3, 4, 5 weeks, fine. But over the next 3, 4, 5 years, I think you're going to shoot yourself in the foot.
What about? You know, I don't know if I fully agree with him. Probably over the long term, you know, Apple will be fine. But at this moment, I do think they have to actually prove the growth to be able to justify the argument. So we'll see if Keith is right on that. I don't know if he's necessarily correct in the short term. Long term, probably. But long term, everyone's, you know, usually right around these tech stocks. Short term, Apple may have a lot more volatility, especially if that earnings does not show a lot of growth. This is Chris's first post on Verizon. This was October 18th, 2023. So this is where we saw him first discuss Verizon. I want to look through this just a little bit to give you guys a sense of how he was thinking about Verizon at that time. This was when Verizon, I'll check it right now. What was Verizon stock? Verizon stock, VZ stock on, what is it, October 18th? So last 6 months. October 18th, Verizon was at basically $30. Yeah. $30. That's when so it was theoretically the bottom right here. Here we go. So let's read a little bit. One of the most significant value propositions that often goes overlooked when it comes to Verizon is the relatively safety of its dividend. Many people tend to focus solely on the total yield, often assuming that a high dividend indicates fundamental issues with the company, when in reality, it's often a matter of accounting. As share prices decline, the yield naturally increases. This is because the dividend typically remains stable or grows only slightly. People don't often conduct a thorough analysis of the company's financials to truly understand what's happening, missing out on exceptional potential gains. So this is where he went through why the dividend is going higher. At that point, their dividend was double their PE, I believe, of Verizon. And so it was one of those things where it was kind of screaming that this might be a buy. And then we have all of his DD on 5G and the deployment of it, broadband additions, CapEx coming down. What is the nature of their debt? As you can see, you're getting like a thesis statement of DD here. And so, you know, quick shout out to Chris for $10 a month. This is I think this is worth it. You know, I think this is indeed worth it. So not bad call, man. He got it right. I did not load up on Verizon at the time. At the time, it was the market bottom and I didn't have cash. So I got to exit some of my positions and raise my cash when we had the November kind of rally, I guess. But at that time, Verizon had already, you know, done what it did. So I did not have a chance to get into Verizon, but I know a lot of people did. And for those that did, they were in a good position. They were definitely in a good position. Okay, so that's Verizon. Did I want to show? I think I wanted to show a couple of other things as well. We talked about Verizon. We talked about Bitcoin. We talked about Apple. We talked about Disney. Let me check on the markets real quick after hours, just see what's going on. Bitcoin stocks are up. Bitcoin 44,500. All right, so we're seeing some momentum there on Bitcoin. Palantir 1628 in the after hours, just up a little bit. CleanSpark up a little bit. Robinhood down 1188, so they're down about 11 cents. They're down about 1% after hours. Enphase took a beating today, 118, down 3.72%. So Enphase was not able to maintain that 130 level that they were at just a week ago. Pfizer was up a little bit today after hours. MicroStrategy as well, 655. I saw a very interesting clip about MicroStrategy. I'll probably share it tomorrow, but it was how they're thinking of collateralizing their debt and like issuing more common stock. We'll talk about that tomorrow, but it was a really interesting kind of version of how MicroStrategy was operating. Can Amit share Chris content for free? Well, I basically do. Every time I share his posts all the time. I'm just saying, if you guys just want it conveniently, you can, Chris shares his content for free on our Finance Junkies. He talks about it all the time. But if you want to support and actually be part of the Discord and all that stuff, that's the, $10 a month is in my opinion, it's worth it if I had to give a recommendation. Okay, this is the one thing I wanted to show. Here's the bearish case from Jay Bryson of Wells Fargo, why the market's going to have a downturn in 2024. So let's get a little bit of the bearish argument as well, since we're talking about the bullish case. Zero Expiration says, Amit, at what price would you consider Verizon now? I don't know. That's at Chris is in the chat. Chris, maybe you can answer that. Honestly, I'm not sure. I mean, Verizon's run up a decent amount since it was at the lows in October. It definitely has more upside, but I don't know if I would get into it right now personally. But maybe Chris has a better understanding of kind of if the risk to reward is still worth it.
Is the worst behind us, or is it yet to come? One of my next guests says we've already seen a series of mini recessions across different sectors, while the other says a broad but shallow contraction is likely ahead of us. Let's talk about it now with Julie Beal, Chief Market Strategist at Kane Anderson Rudnick and a CNBC contributor, and Jay Bryson, Wells Fargo's Chief Economist. Welcome to you both. Jay, are you the one anticipating a downturn still?
Yeah, so Kelly, if I would say it's going to be a modest downturn. I mean, I think anyone would stress that. I mean, I don't think we're looking at a major pullback here in the economy, but we are starting to see some cracks in terms of consumer spending. And, the Fed is still in restrictive territory. I think that puts some headwinds on growth, in the coming quarters.
All right. So what would you say that implies for, not that it's where you kind of have to make your calls, Jay, but so those expecting Fed rate cuts and maybe the March timeframe, are they right? But are they right because of the slowing economy?
Kelly, I think March is a little bit premature at this point. I just, if you're reading through the minutes of the January FOMC meeting the other day, I just don't think they're at that point yet. I mean, I think something would really have to fall apart in the economy where you see a rate cut actually in March. Could we see one in May? Yeah, I think that's very possible to see one in May. But March at this point, I think seems a little bit premature for me. But once they start moving, whether it's in May or wherever, I think they start to move pretty quickly. At that point to bring rates down.
Julie, what do you think is going on with the market here? Is it reassessing rate cut? I mean, is it because the data is better than expected? Is it because it's worse than expected? Is it just everyone was on one side of the boat and now we're going to the other side? I mean, notably, the 10-year yield has moved up. What do you think is going on here as we turn the page on the year?
I think looking at the minutes, it's pretty clear that rate cuts in March, I agree, are pretty unlikely. If something really falls apart, that's probably going to be what drives the rate cut. And
the rest of the market disagrees with her. The rest of the market's at 70% no, we're getting those cuts in March. And maybe that changes over time, but so far that's the approach by the market.
That's not good for equity markets, right? Broadly speaking. But I also think that a lot of the buying that happened at year end was pretty indiscriminate. It's sort of like when you're at Target, on December 23rd, and you're just trying to find something for, your cousin who you don't even really like that much. It's just buy whatever you can. And now I think people are recognizing that they need to be a little bit more discerning, particularly if interest rates remain a little bit higher and longer than we're expecting. And so I think people are looking back at what they own. And I think it's really the time to be very careful and selective about quality. It's so hard to predict what's going to happen. Think of where the Fed governors are right now for 2025. You have one of them at 5.5 and you have one at 2.5, right? So they're going to be very data dependent, and there's not really broad consensus on where rates are going with them.
And I think, Julie, I tend to think of you as looking for like idiosyncratic stocks. So where are you on the Mag 7 or the Lag 7 or whatever we want to call them?
I think there's opportunity still within those businesses. Part of the reason why they did so well is they have much greater clarity on their ability to execute on the vision for AI. And so to me, it makes sense, but I wouldn't be overexposed to those businesses. I think within sectors within the economy, you want broad-based exposure, but you just want to own the very, very best businesses. And so in tech, the Mag 7, Lag 7, whatever, those are the best businesses. But if you go down towards small cap and mid cap, you'll see across industries, you really want to own the market leaders. I think those will protect you, and they'll still probably participate in the upside going forward.
Okay, so again, the same kind of argument we've heard for a while, which is that the market's a bit frothy in terms of how well they did in 2023. That's why it's going to be harder to justify the current multiple increase. On top of that, rate cuts not coming in March. Right now, I just looked at the CME Fed Watch tool. It reduced from 70% to 66%. So after the Fed minutes yesterday, about 4% of analysts decided that it's not going to happen in March, but still the far majority think that we're getting at least 25 basis points in March, and we'll end up seeing if that actually happens. Chris says in the chat, the real value was in Verizon options. Low beta stock call options were trading super, super low. I'm up over 200% on my Verizon position. What Chris did in Verizon is actually, it's just really incredible. And it goes to the point around why options can be so lucrative if you pick the right stock with the right thesis. Because his Verizon play was very similar to an extent to the Robinhood play, which is that when you have low beta stock call options, because the stock is depressed, the price is depressed, and everyone's kind of left it for dead, but there is a thesis, and you know that thesis before everyone else. This is also what Chris and I were able to do on Truist, right? At $26, everyone thought there was going to be a bank run on the 7th largest bank in the United States of America, a super regional bank. And then that sucker goes from 27 to 37. That's where the options can multiply by a factor of 3 or 4 if you get in at the right time. And so Chris obviously got in these Verizon options when the market left it for dead. That took a lot of DD and a lot of research to understand why the stock was going to go higher. And he got them in 2026 in terms of the options. So even though they're far out into the future, which theoretically should reduce the premium you get in terms of the multiple of return because you have so much time. So the market's just it's going to take a lot longer time for that contract to expire. If the stock actually does go up from 30 to 38 that quickly, then the options will go up, even if there's a lot of time as well. So that's where I think, the strategy for options, at least as I'm learning options in a much broader sense, is you have to find a thesis for a stock, and it doesn't come around often. It's just in 2023 it came around so much because the whole market was depressed and there was this recovery period, this kind of reversion to the mean thing that was happening. So a lot of these companies had to get back to their normal levels. This is what happened with Meta, from $90 to $300, or at least to $200, right, at fair valuation, and you could ride the options higher. And so it was a good play, good play on Verizon. Amit, show them the thing I just sent you. Okay. See, now that I have a Mac, I think I can actually share these pictures. Can I share? Actually, no, I'm just going to do it on my phone. That's easier because that's easier from here. Okay, so these were the options that he bought. So this is the $40, $50 call. Okay, so remember what Chris did is he bought the $40 call, sold the $50 call. He's saying that Verizon will be $40, but he's also shorting the call by saying it won't be above $50. And so the difference between the $50 call and the $40 call, that is what he pays for the premium for the spread. That's called a call debit spread. He paid 78 cents. Okay, October 16th, or at least that's what it was worth. And today it's worth $250. Okay, $250. So if you divide 250 by 0.78, that is a return of 320%. Currently, he's up 200%, so he probably paid a little bit more than 78 cents to get there. But that is where there's a premium. And the other thing about options that's all I'm also learning as well, Chris could sell this right now and take his gains, right? You don't have to wait till 2026 because someone was willing to pay 78 cents on October 16th. Today, someone is willing to pay $2.50, which means if you have exit liquidity, maybe it doesn't fill at 250, maybe it fills at 230, maybe it fills at 190, whatever it may be, right? You have to see what it fills at. Whatever someone's willing to pay, you can sell it right now and you could have made 200% within 4 months and go away. But I think Chris is going for something a bit higher. Remember, the most he can make is if he bought it at $2, you can make a 5x on this because 50 minus 40 is $10, which means the maximum amount that the spread is worth is $10 per contract. Right now, it's worth $2.50. If you paid $1 per contract or $2 per contract, 10 divided by 2 is a 5x, right? So if you put in 30,000, theoretically at $2, and it goes to $50, and you can sell it at $10 or $9.50 or whatever, you can make $150,000, right? If it 5x is something like that. So it depends on what your price is average per debit spread, but that is a reasonable return if you pick the right stock that has the ability to get to that alpha, and you have years for this to play out, which is another really good thing about these options as well. Why would you invest in Verizon options if they don't pay any dividend? So remember, if you want the dividend, you buy the stock and you get to have some dividend income. If you believe there is capital appreciation to the underlying asset, that is why you buy an option, because you believe, or at least a call option, you believe that the asset will achieve your desired strike price. In this case, Chris thinks it can get to at least $40. And as a result of that, the underlying asset, if it gets that level, the options have a stronger alpha if the asset goes higher. This is how Meet Kevin made a lot of his money as well. People forget in 2020, Meet Kevin had a couple $100,000 of Tesla options. Tesla 20x from 2019 to 2020, something like that, right? So, maybe I'm being hyperbolic, but it was a massive, I think at least more than a 5x Tesla did in that year. So if you have the underlying asset go up that much, your call options are going to go up a lot more. And that's where I think he made like $7-8 million just off those call options, something like that. He made a lot of money, right? And so that's why people do it. Now, if you just want the dividend and you want to play it safe, that's fine. But if you see there's same thing with Truist, if you see there is capital deappreciation that is happening, which means there is a chance for appreciation over the long term, then the options can do well on the underlying asset as well. So remember, the only reason this works, and this is the biggest lesson I've learned, this is why I think you guys watch the market close and the market open, because I'm trying to be authentic and genuine in explaining my journey, because I'm not an expert in this stuff, but hopefully in the next couple of years I can make a lot of money because I get a lot stronger at learning this stuff. And that's why I'm grateful for people like Chris that are in my life, right? Because at 26-year-old, he didn't have anybody who's here, but I'm lucky to have someone like him at 26. This doesn't work on just some run-of-the-mill, I think the stock will be XYZ price. At that point, you're just gambling. You have to have a sophisticated thesis. So when I made my options play on Robinhood, which has done very well for me, like significantly well, and I think it can do even greater over the next 2 years, there was two things I kept in mind. Number one, get the 2026 options, even if they're a little bit more expensive than 2025, because you need that time to let the thesis play out. And number two, actually have a thesis. If you do not have a thesis, you are gambling. And so Robinhood is not like a mean reversion type of thing like Verizon or Truist. It's a little bit different of a thesis, but God knows how many hours I spent trying to develop that thesis because I put in a lot of money. I put in a lot of my hard-earned money into that thesis. And I put it in within 24 hours because once I figured out the thesis, I was already kind of late. And so I knew it was going to run. And I was like, all right, this is the time. This is the moment. And that's the really special part I felt about the end of December is like, once I had found out that this was going to happen, or at least I had an assumption that this was going to happen, I just made the call. And there was one day where I just like took all the cash I had raised from selling in November. And I kept about 6,000-7,000, put it in the bank, left it for expenses. And the rest of that cash, I was like, this is going to this one play and I'm doing it today. And I did it. And since then we've never gone negative on that play so far. Thank goodness. We'll see what happens. Market could crash. Anything could happen. But so far it's been really well. But I had a thesis. Where I had conviction. And if I'm wrong about the thesis, then I'm wrong. But there is a thesis. It's not just like, Robinhood could get to this price. But it's like, no, I know every last underlying aspect of that business. I could still be wrong, but I have a fucking thesis. And because I have a fucking thesis, there's an argument right there. Amit, how much are you up on Truist right now? I'll give the comment section a lot. Yeah, it's a decent amount of money, dude. It's money where, like I showed my dad the other day and he still doesn't get it. It's so funny because there was a time when Chris made a play on Weight Watchers and Chris texted me a picture. He was up like $9,000 in a day. And on Finance Junkies that day, this was like probably January of 2023. I was like, Chris, how does it feel? You're up $9,000 in a day. Like, that's insane. And Chris was just like, well, it's all right. And I couldn't rationalize. I didn't get it. I was like, dude, $9,000 is a lot of fucking, I don't care how rich you are. $9,000 for just pressing some buttons on a phone is ridiculous. Like, it's real money. And I was like, dude, I couldn't imagine what it feels like if I ever feel that one day. And then there have been days throughout the past year where like I'm up significantly more than $9,000, right? And you start to realize these are actually just numbers on a screen. They're not real gains yet. You have to be very diligent with how you think of it. But like when you're playing with certain amounts of money and you're actually allocating in the right ways, the numbers can get very big because you actually are doing something that has the potential to give you a return. And so it's the nature of any entrepreneurial journey. I mean, if you start an e-commerce business and you start, doing sales of $10,000 a day, someone will be like, that's crazy, $10,000 a day. But if you're doing your marketing correctly, if you have a good brand, if you're really doing the right outreach, then yeah, why can't you do $20,000 a day? And that's just the nature of how these markets or how this entrepreneurial journey kind of starts within whatever niche you're operating in. And so, yeah, it was really interesting to kind of see how that play out. Wanna Win says, how high are you feeling Hood is going? I think Hood can get to $20 by end of 2024. That is my basic thesis. Look, this is the year for Hood to be able to do it. And there's a lot of DD. I'll probably talk about it later. I've talked about it so many times on the channel, but the core thesis is that if crypto is making a comeback, Robinhood's main source of transaction revenue back in 2021, if you look at their Q2 earnings, 2021 was cryptocurrencies. 233 million out of the 496 million they made was crypto. Over 50% of their transaction volumes was crypto. And then this is not just me guessing. If you look at the 8K, In October, crypto transaction volumes were up 92% year over year. In November, it was up 75% year over year. In December, I can only imagine it's going to be at those same levels or higher. Then you've got the UK expansion. You've got their support team just over flooded with the amount of people that are transferring their brokerages for that 1% match. You've got them now charging for option contracts, which means they don't have to bite that cost, which could increase their gap profitability. You've got Vlad basically, saying at the end of the day, Robinhood is a company that is turning into the Gen Z millennial version of finance. And yes, Schwab and Fidelity have trillions of dollars, but that's the opportunity where Robinhood doesn't have that money yet. And if they can get that money, that's very important. You got gold subscriptions that are growing 100,000 quarter over quarter sequentially, $5 a month. They're just printing revenue from that. You've got net interest income. They've got about $5.4 billion in cash. They're just throwing in short-term treasury bonds. They're generating about $250 million of income off of that. You've just got a lot of avenues, and half of the market cap is still cash. So even if Robinhood faces a drawdown, if it goes back to $10, it's going to be sitting at a deep value territory, which I think the market will buy up as you start to recognize that there is a real thesis around this company. I sent $1,000 of Bitcoin to someone in Nigeria yesterday. Robinhood charged me $2.45 to send that Bitcoin on a network fee. That is the cheapest I've seen it cost to send Bitcoin to someone. I mean, dude, it's like at the end of the day, the product is really superb. And I've got 2 years for that thesis to play out. So we'll see what happens. Austin Smith says, do you see Hood as a good long-term brokerage? How do they keep up with Vanguard and Fidelity in the long term? I want to be able to use it as my main brokerage for retirement. That's another thing. They have the Roth IRA that has over $1 billion of assets that are on there now. I see Robinhood as a play against Vanguard and Fidelity for people like me that find those platforms boring. And there's a lot more people like me that want something easy to use, something that's just super convenient. There's millions of people like me that want to use that, right? And there's already millions of people using Robinhood for that exact reason. So from that perspective, look, maybe they don't get as big as those guys. If anything, they get bought out by those guys for a nice premium. We saw what happened with E-Trade and Morgan Stanley. So at a $10 billion, $11 billion market cap, I really do think there is room for this stock to be $20. At conservatively, by the way, if you put a 15x EBITDA multiple and you assume their average revenue per user gets to about $100 per user, and they get to about 25 million monthly active users, which is similar numbers to what they had in Q2 2021, a little bit more than that, a little bit less on the average revenue per user. You get $16 a share when I did the math, which is like still high upside from where it is right now at $12. So to me, that's where the thesis is. Want to win? We are thinking of switching from Schwab to Hood, 1% portfolio match. Yeah, I don't know why you wouldn't. I mean, outside of just convenience, the app itself is beautiful. There's it's just an easy product to use, and you get 1% match. Like 1% match if you have a substantial amount of money for free. That's like a great idea in my opinion. So that's what I would do. Brian says, are you selling options for income against your position you sell February 2, 415 calls, get a $200 per contract? I didn't look into that. I could look into that. I have not done that. Honestly, I've just left my position and just letting it be what it is. I kind of just want to let the thesis play out and not think about it too much, but I potentially could do that. I never sold options for income against my position on options because I don't actually have any shares of Robin. I just have the option. So yeah, never did that. Imnop says Hood doesn't have any secondary insurance aside from SPIC coverage. Fidelity and Schwab have supplemental coverage over $500K. Yeah, I mean, they do have FDIC insurance up to $2.5 million, but I guess they don't have the secondary type of coverage. So that to me has never been the biggest deal, but I don't know. I mean, look, if I have my money insured up to $2.25 million, I don't have $2.25 million in Robinhood. So if they lose my money, I'll be okay for that $2 million. Okay. I think that's it for me, guys. That is it. We are done. We have a new podcast. Invisible Voices says, I just like the stream. I appreciate your content, bro. Thank you for liking the stream. If everyone could like the stream, that means the world to me. Third market close of the year. Me and Steve are doing a podcast in 25 minutes. Okay. This is going to be a podcast. I don't know the name of it yet, but we are deep diving on one stock per week for 52 weeks. So today's stock is going to be an interesting stock. I think a lot of people will be excited about it. Steve thinks there's a double on the stock over the next couple of years. So we'll talk about that, and it'll be an hour of us just breaking down this stock. So if you guys are interested in that, at 5:15, we are starting that podcast today. Okay. That's it for me. Thank you, everybody, for being here. Appreciate you guys, and I'll see you in 25 minutes, and we'll have Finance Junkies later today at 9 p.m. Davis, you're saying hi right at the end of the stream. Dude, you always join right at the end. Imnop says, no, FDIC doesn't cover brokerages. SPIC does. SI pieces. Okay. Yeah, I guess that's one thing that Robinhood does not have as well. So that it could be one of the arguments to stay with Schwab or Fidelity, but at the end of the day, there are some other arguments for why to stay with or try to transfer to Robinhood. All right, everybody, that's it. Mitch just got here. What was the news on? I'm trying to leave, and you got the news on the Bitcoin ETF was that the Grayscale legal officer tweeted, "I'm filling out some forms," and a senior Bloomberg ETF analyst said that the ETF is coming. Essentially, like he said something more complicated, but he basically said they're filing the final S1s, 19B4 forms, and that it's on the way. So we'll see if it happens. All right, everyone. I'll see you guys later. We'll see you in 25 minutes. Bye. Have a great day. Good night.